October 1929. The air on Wall Street felt electric. For years, the stock market had been climbing higher and higher. Ordinary Americans weren't just saving money anymore, they were investing. Teachers, farmers, shopkeepers, everyone believed stocks were the fastest way to get rich. And if you're into real financial history like this, make sure you're watching Prince Karo YT, because stories like this shaped the modern economy. People were even borrowing money just to invest. This was called buying on margin. You could put down a small amount, borrow the rest, and hope the stock price kept rising. And for a while, it worked. Prices kept going up. Confidence kept growing. But beneath the surface, things weren't as strong as they looked. Companies were overvalued. Profits weren't matching stock prices. Banks were heavily involved in risky investments. And millions of people were putting money into something they didn't fully understand. Still, no one wanted to believe the boom would end. Then came October 24th, 1929, now known as Black Thursday. Panic started quietly. A wave of selling hit the market. Investors suddenly wanted to cash out. But there were too many sellers and not enough buyers. Prices began to fall. At first, major bankers stepped in. They tried to stabilize the market by buying large amounts of stock. For a moment, it worked. Confidence returned briefly. People thought the worst was over. But it wasn't. Just a few days later, the real collapse began. On October 29th, 1929, Black Tuesday, the market crashed completely. More than 16 million shares were traded in a single day. That was an unimaginable number at the time. Prices collapsed. Fortunes disappeared within hours. People who thought they were rich suddenly had nothing. And the worst part? Many investors had borrowed money to buy stocks. Now, not only were their investments worthless, they still owed money they couldn't repay. Banks began to feel the pressure.